Hello, everyone. Welcome to our webinar, Securing More Mandates and Closing More Deals, Supercharging Your Deal Making with Technology. My name is Michael Sand, a Senior Demand Generation Manager here at Affinity, and I'm joined by Chuck Guy, Managing Director at Lane Capital. The goal of this conversation is really to have a high-level discussion with a thought leader in the investment banking space, one of our clients, and just go through a bit of his background, some of his history with technology, and then through changes and updates that he views in the current market dynamics. So with that said, let's get started. I will get this conversation underway. So Chuck, I gave you a bit of a brief introduction, but if you'd like to introduce yourself, that'd be awesome.
Yeah, thank you, Michael. For the last 15 years, I'm working in structured finance and investment banking, assisting early stage companies, growing companies, to raise money for the next stage, including project related and natural growth. Working in this space introduced me to people on all kinds. I learned that to achieve deal closing required much more than just surface data that you collect, required much more of a deep in-depth information about who our clients are. This was brought me initially to start working with Affinity.
Interesting. So I guess maybe going a little deeper into that, prior to Affinity, were you mainly working with spreadsheets, or did you have another CRM solution or some other solution that you were using?
Yeah, many people say that the biggest development in investment banking the last few generations was Excel. Since Excel, not much done. CRM like Salesforce and other, it's practically another place for you to enter data. And if you don't do it, it's left empty. Then you need the two clerks just to type data in. It's the data you collected. It's another file cabinet that take you a lot of time and expense to do. I used Excel before, I use a CRM. Are they efficient? No, not really. Starting to work with more automated data in recent years make my work more efficient.
So I think I'd be inclined to agree. I'm curious, when you talk about automating data, are there specific data points that were specifically tedious to update? Was it something like calendar invites, or was it pulling in email information and sorting through the emails, or what about automation has simplified your process?
I said all of the above. It's always start with the basic, collecting data about the prospect, whether it's a customer who raising the money or the investor, collecting the basic data that I know who they are, that I can evaluate the priority of dealing with them. The second is after you acquire them as a client, to gather data on meeting the stage in the pipeline, which normally done manually. Collecting the email, collecting information exchange. Now, I'll be honest with you, most time we don't do it. You don't collect every email. You collect the one you believe it's important, and many times you miss something important in an email. Then it's practically more intuitive and you do it on your own. It's not really data collecting. Moving to more automated system, gathering all this email, not only make it complete and efficient, also compliant. If I need to go in an audit and verify the email with attachment of specific presentation, I always have it in the client account and it's done for me by the program. I don't need to remember doing it.
Yeah.
At the same time, updating information on fundraising in the past of client, it's give me complete picture. What's done before, how successful the company is in raising money. When I sit with them for the first meeting, I already have all this information. And if something updated in the market, it's already there, whether it's come from any data points. Which data point, the more the better, but to be focused on what's important. For me, knowing how many employees in a company and the changes, whether up or down, it's very critical. I know that is the company need more money or need help. And seeing it right from the first that they have a decline in headcounts, meaning the company running out of money in a very early time of the life.
Yes. So, and just to clarify, so you're talking about the data enrichment portion of I guess the Affinity CRM specifically, but just higher level than that would be having access to some of those company and individual data points is something that you actively are using for your process of, looking through companies and determining whether they would be a good fit or not for your process.
You'll find it surprising, but some of the data points we're looking at come from the very, very basic. And for an example, Affinity collected data on what the company does or description, among other, from the website. And I found that before my first call, I just can't tell what the company do. It's because they didn't know how to describe themselves. What's the artificial intelligence, the robot brain found was what the company said. And what the company said is not what's most important for public, whether it's investor or it's a customer to know. And in my first call, I already know this company may have a problem on articulate what they're actually doing. Then starting in the very basic, I have a good picture. If I can learn about the company from Affinity, from the description, I know this is a good company. Going now to the data points, employees, last fund raised, how much, I can be prepared for my first meeting. My chance to close a deal, it's much higher. I'm not coming as a going fishing expedition. I can show the client I know all about him. Some of them very surprised, didn't know this is public.
That's so. Asa kind of leads me into the next. We're coming out with a guide pretty soon where we spent some time trying to understand the investment banking workflows from the perspective of, what goes into closing a deal successfully and how do you increase your chances of doing that? And so what are the, one level down, what are those high level workflows that contribute to that? So I think the place that we're currently working on is that you have three main processes that you can optimize to end up closing more deals. So it'd be building relationships, getting timing correct, and then proving your value to the client. And if you can make small changes to each of those, you can ultimately, vastly increase your chances of closing that deal. So it sounds like, just based on the way you've been using it, having access to that second order data through some enrichment is helping improve your timing, if I'm understanding correctly, where you're able to see, is a company, going down in headcount? Are they probably looking for funding right now? What's the situation with them? For the other two pillars, so for relationship building and for proving value, have you found, it sounds like automation might help with relationship building. Have you found any other methods of improving that, in Affinity or not in Affinity, but just any suggestions that you might have for anyone watching?
Yes. Don't forget, investment banking have two sides. In one hand, we need to, in a pipeline, to build relationship with people who need money. I call them the issuer. In our case, it's the early stage technology companies, some real estate companies, all related around the technology. In the other hand is the investors. And if you look at this in a graphic, you're going to see in one hand where the issuer is a very large number of companies in the pipeline. It could be sometime over 100. While in the other side, there are very few. And on bringing in the pipeline clients that we go in and sell their offering, we need to screen to bring the good one. Our inventory is time. And if we don't use the time right, we're losing money. And I need to bring the best issuer, the best companies, the best early stage companies And with scalability, merit of technology, merit of the financial projection. On the other hand, the investors, there are much fewer. We do the exactly opposite. We need to find the right one that we're not going to waste time presenting to someone who is not a candidate. But on every 50, 60 issuer, we have 1 or 2 investors that we're screening. Then it's 2 different jobs. The automation help screen right in the issuer, but help analyzing with the data points available, the proper investors, the sector he dealing with. For example, right now in California alone, there are 3,500 VCs. And I'm sure they all want good deals. If I have ability to click on a button and talk to all the 3,500, I wouldn't have a problem. But it's not, this is not the way life goes. I will be considered a spammer if I send 3,500 email every day. With Affinity, we are able to build the list of the opportunities and analyze from the screen and create priorities. And with this new feature of mail merge, we can now even send for 5 or 6 in a time the same presentation. Since the email collected automatically, we don't need to follow what's happened next. It's instantly recorded into the program. We can follow the pipeline without losing any response.
Okay. So that does sound like a pretty big time saving. And then I guess that helps you. So you're right. So there are 2 sides of the banking process. And it sounds like that you're getting your investor or buyer list, whatever process you're looking to accomplish. It sounds like there are ways of optimizing that. So then I guess that would bring us to the 3rd pillar of everything, would be proving value. And I guess you have to prove value both ways. You have to prove value to the objective company or the company looking for funding or looking to be acquired, and then also to the investor or the buyer. So it sounds like once you have that list down, is there anything that, technology-wise enables that more easily, or do you feel like that has not really changed too much since you've been doing it?
Mm-hmm. The technology allow me to reduce amount of time to acquire customer. And the metrics here is very simple. Since my inventory is time, the lesser amount of time to acquire a customer issuer, or the lesser amount of time to find the right investors, I return on my investment, meaning the paying for the program. Using the technology, we see on the investment side, sometimes nearly 70% reduction of time, meaning on every dollar I spend, I have a 70-cent return. On the other side, acquiring customers, we're saving about 25 to 30% of the time. That the combine, the technology, the automation, the availability of more data points on both sides, increase the value of every hour we spend. Which again, time is inventory. I measure my return by how much time I use, and I need much more time to use to earn $1.
Yeah, it's awesome that you're measuring it that way. I think that would bring me to something that I really wanted to pick your brain about, that is more connected to what you're observing as broad market trends in the investment banking space. I'm wondering, just as someone who is very active here, who has a very good business here, do you see, or what trends are you seeing? I don't even want to, guide you too much on the question. Just I'm curious, when you look at investment banking right now, are there specific trends that you're noticing that you think that we should be aware of?
A trend always starts with people talking, not doing. And at this point, we do see a lot of bankers talking. Not only bankers, people participate in the space, whether it's investors or serial entrepreneur who already go into the 3rd or 4th companies. People talk about automation, on automating the ability to analyze all this ocean of data. But very few people actually doing it. You see many of the products are so specific in helping a very small number of people. But as a trend, people talking about this now, it's mean very soon we're going to see more automation. But in the end of the day, you still see in Wall Street people running with briefcase. During COVID, they couldn't do it anymore and being forced either to sit at home and wait for COVID to be over, pick up the phone and call people, or start to look what technology can replace running in the street. It's hard for, we are in a stage that combine both investment banker, investor, and entrepreneurs still believe that only the personal relationship work. We need to make people believe that automation work. And we see the younger generation banker who grow up with more technology, deploying this new technology better than the old banker. Over the next 10 years, probably artificial intelligence and other automation tools will be the dominant in the market. You already see some VCs that don't want to see presentation unless it's been uploaded to their own platform. You see more activity on M&A platforms. There are quite a few. Every week I'm getting an email from a new platform. Some successful, some not. In the end, the ability to analyze data automatically will be the one who chooses successful from not successful platforms.
Something I wanted to go a little deeper on is something what you were saying a couple of minutes ago. It was about the newer generation of bankers being a lot more inclined to use automation versus the I don't want not necessarily older, but the maybe previous generation of technology being more relationship driven. So in your mind, what does that look like prior to automation, or what was that relationship driven connection? How did that operate prior to automation and technology?
Prior to automation was dinners and lunches and a lot of champagne and red wine. Today there is a fancy microphone replacing the champagne.
Yours is better than mine.
A studio rather than office. If you could see the picture around me, all the lights, I invested more in technologies and in office equipment. Then we're sitting in a studio, generating data to spread outside that people can find us through automated data. We want investor to pick us up, not the other way around. In the past, you had to run with your briefcase, go from office to office, and maybe in a year, you're going to see 20 investors, 50, who are willing to let you in, take them again for lunch. That you work with a very small group of people. You had to focus on more specific areas in technology. You could not see hundreds. Today, when I'm raising money for technology company, I can deal with aviation because I know 5, 6 major investors from the past, but I have access to another 100 that I found through data mining that also looking at this. And maybe from the 100, I will have success with 3. And from the 5, I know also 3. Then it's double my technology, double my reach. If I had to do it only by running in the street, it's another 20 years. I do it with a few hours. Success rate in the large scale is reduced, but it's taken me friction of the time. I reach this 100 investor or 20 in a friction of the time. Don't need to run. And the younger investors also not expecting you to take them for dinner and lunch. They want to see data. They want to see what you offer, and they want to see that you know what you're presenting. Building expertise, not only in one area. As a team, we can build, in our firm, we can build expertise in several fields, build relationship in like the old time by taking people to dinner when we're hungry, but we can reach out to many more that we screen, identify, and pinpoint that good for specific deal by collecting automatically data and have the artificial intelligence do it for us. You can combine eventually things will switch more. More and more investors want to be reached out via email and platforms than rather come and knock on the doors.
You know, and something as you were saying that, it just I think it seems hard to me that that older process of, I guess, more manually laying out your network and thinking about who should be reached out to. There are just so many companies, it seems like, that are interested in funding or are interested in acquisition, that it seems like a daunting task to even know how to get into those networks from where you are. Whereas if you're able to assist that process with technology, you might see connections that you probably would not have thought of previously. It seems like a daunting process, to be honest, either way, but prior to technology, it seems very difficult. So I mean, you saying that you doubled your success rate, that is incredible.
Prior for technology, most of this data mining was impossible. If we look in a number of institutional investors globally, at least the one who listed themselves, there are over 200,000 institutional investors in early stage. No one person can possibly reach them all. People in the past build relationship. Today, with the ability to analyze data, we can shrink, of course, from this 200,000 for geographical area, focus area, strategy, philosophy, and narrow down for the best 20. And we can do it with a matter of few hours. In the past, this will be a job, impossible job. Nobody will sit with analyzing 200,000. Data mining, the correct data mining. You know, when they started to do all this investor database, some without naming people, the data was not correct. I, more than 3 years ago, start to download data to my Excel sheet, compare them to LinkedIn, and you see the data is wrong. Then data mining become a much more accurate science today, and it's improving. The trend, we see more and more accurate data out there to help us screen and narrow down to the proper investor per deal.
I think, you know, from other clients, I've definitely heard the horror stories of not having that data enrichment and not having the correct contact information. It just leads to situations where you either screw up your timing, where you're not able to reach out to someone at the right time, or it's just embarrassing, where you call someone, you think they're working at one place, they're working at a different place actually. And so having that reliable, updated information, I think that's such a huge part of eventually going down this approach of automating the rest of the process. And then once you are able to do all of that successfully, really increasing your returns after that.
It's all come back to time. An investment banker have only 18 hours a day he can work, 6 hours he need to sleep. And in these 18 hours, the more time you spend with automation, the more time you have to do other things. And you need a couple hours to eat, play baseball with your kids, go to a movie. And if you use your time properly, you can achieve the same amount of work than in the past. But the key is to be efficient. It's not how hard you work, it's how efficient is your time used. And if the time you spend at the office is done on the presentation to the right investors, your success rate will go up. It's only in matter of numbers. I can give you my statistics that on every 12 investors we do a presentation, 4 ending to be interested in the product or the offering. From the 4, 1 will come to the finish line. Then if I can show deal to 120 investors, I know I'm closing 10 times more deal. Yeah. If I, in the old time, need to run from 1 to 1, 12 investors will be 2 months. I can do it today with a matter of 2 weeks. Just a matter of gather data, do it correctly, and send it in 1 day.
I think, so I'm very familiar with this form of thinking, just coming from marketing. I feel like we're always thinking about that same conversion rate from someone that, you know, has never heard of our company down to someone who would be interested in purchasing our product. And I think we're operating on the same level of automating things and trying to just optimize the process. And if we were to try to do this manually, it would be a nightmare. And I find it interesting that that same mentality is really catching on in so many other industries as well. And not even catching on necessarily, but you can do investment banking the old way, but what are you leaving on the table if you do that? And are you really maximizing your revenue at the end of the day if you're not trying to optimize your process?
The market today is much bigger than was 20 years ago. You're competing, every investment banker competing with thousands of new young bankers that energize and more technology savvy using other methods that we did. I'm still young, I'm still 29, but there are much younger guys out there who came out of college and using technologies. If the majority of bankers will stay home and run with the briefcase, we be out of business. Then, like you asked me about trends, yes, there are trends toward technology, but it's take time. You still have the old guy who don't want to adapt. You have the new guy who going full out there with technology, and majority in the middle. And I think moving toward automation, in the next few years, we're going to see acceptance of technology by all sides, entrepreneur, investors, and the banker in the between. The role of the banker will not be disappear. It will just improve. Many people say if it will be so efficient, you don't need a middleman. And the role of the banker is not a middleman. We helping the issuer position himself right, improving his basic data and operation, not only from investment point of view. Most of what we do in advising helps them acquire customers. On the other hand, because there are so many people raising money, and if you look today, the number compared to 20 years ago, it will be tens of thousands more per investors. The VCs in California, we mentioned 3,500, seeing 70 to 80 deals a week. The role of the middleman who using artificial intelligence and other automation is to screen. They can efficiently see 5 to 10 a week instead of 70. That the role of the banker will not disappear. It will just improve. The best one will stay in business. The one that's not so good will go away. But the role will never disappear.
I could not agree more, just because technology really operates as a system to increase volume and make things more efficient. But at the end of the day, you need the person who's experienced and can wield it in a way that is actually meaningful. So all it does is enhance you. It doesn't replace you.
Mm-hmm. And the skill of investment banker changed too. If you see in the past, go to 4 years, study finance, get degree, get your FINRA licenses, and go out there. Today required much more technology knowledge. And not beyond technology, if you're in the mining and energy, you need to know much more about mining and energy. That the basic skill is far beyond finance. Finance is just add-on. Compliance, which you study when you get your licenses, the FINRA license, it's on top. But the basic is understand business, understand the specific area where you are, using artificial intelligence beyond dry data. Like I mentioned in the beginning, I use it also to understand whether my client pitching his added value correctly. Does the client understand what people see in him? The beginning start with artificial intelligence who read what he say. Then the bottom line is artificial intelligence will help far beyond just match a dollar to founder.
Yeah. I want to be mindful of your time. I really enjoyed this conversation. Is there anything else that you wanted to add in before we close it out?
No, thank you for having me here. I'm looking forward for our next one.
Me too. Me too. Just some closing remarks. This webinar will be available on demand on Affinity's website. Everyone who registers for it will receive an email that will let you watch it on demand as well. And with that said, we're looking forward to having you all on for the next one. Thank you, Chuck, for joining us.
Thank you.